FSA, HSA, HRA, all of these different acronyms, adding to the complexity of open enrollment season. And you might be scratching your head, what's the difference? Where are they similar? And which one might you should use? And happy to talk about that today. But when I think about these things, it makes me think about choosing the right vehicle. And a funny story comes to mind. I played offensive line. I'm a fairly big guy. If you haven't met me in person, I'm about 6'8". At the time of this recording, I'm about 320 pounds, and hopefully dropping that sometime soon. But I played about 330 pounds offensive line, and every once in a while, we would use scooters to get around. So on campus, we would drive. I had a scooter, a little 50cc scooter that I would get around on campus, and it was probably questionable if it could hold me. But sometimes a few of us, sometimes up to 3 offensive linemen, would get on this little scooter and just cruise on down the road to get to practice or to get to wherever we were going. So almost 1,000 pounds probably at some points on this poor little scooter. And so that was a bad choice of vehicle for what we were trying to do. But we were young and dumb and college kids, and so we wore out that scooter and eventually blew out the engine. No wonder why. And so, what does that have to do with HSAs and FSAs and HRAs, all of these different acronyms? Well, it's about choosing the right vehicle, and choosing the right vehicle when it comes to financial instruments. And one working out of that is in different sorts of savings accounts that employers often offer to employees for their benefit, because usually there are some tax advantages to these different savings vehicles. And so I want to go through the differences, starting with FSA, or flexible spending account. Now, there are 2 variations of the flexible spending account. There's a healthcare spending account, and then a childcare spending account. Now, all of the contributions that go into the flexible spending account, whether for childcare or for healthcare, are going to be pre-tax contributions. Woohoo! We all like saving tax money, right? So every dollar that you put into that flexible spending account, you are going to reduce your taxable income by that much. So let's say you put in 1,000. Let's say you make, for easy numbers' sake, $100,000, and you put in $1,000 into a flexible spending account. You're only taxed on $99,000 that year. You're not taxed on a full $100,000. So you get the tax benefit of the money going in. In addition, any earnings in that account, if there's interest or what have you, sometimes there's interest. Interest hasn't been much recently, so you probably don't have too much interest associated with it. But if you did, that also would be tax-free. And then you can use that money throughout the year to pay for your healthcare cost or for your childcare cost if you have children under, I believe it's 12 or 13. Under that age, if you have any sort of childcare related costs, so private school K through 12 is not covered, but if you have daycare costs or after school costs, things of that nature are covered from the childcare standpoint. And for your healthcare expenses, those are all of your regular medical expenses that are necessary medical expenses. So go to the doctor, dentist, things of that nature. Any sort of cosmetic procedures most likely would not be covered by that flexible spending account. But there's a long list you'll want to check with the IRS website on what are qualified medical expenses. And so that's how a flexible spending account works. The main downside of the flexible spending account is that if you don't use the money by the end of the year, you lose it. So if you put in several $1,000s, you could end up losing all of that money if you don't end up spending it. So you really do want to try to spend it throughout the year and plan pretty appropriately with how much you're putting in there. From a strategy standpoint, you generally, if you're using a healthcare flexible spending account, you want to put in there maybe what your deductible is, or maybe even potentially what your out-of-pocket maximum is. Contribute to that, especially if you were one that maybe it has an inclination to not have a healthy savings account. If you do have a healthy savings account, you may end up not even necessarily wanting to use a flexible spending account because of the potential for losing the money at the end of the year. Now that is different from a health savings account. So the next one is a health savings account, HSA, and a lot of people think they're the same thing, but they're not. The health savings account can only be used for a high deductible plan, where a flexible spending account can be used really generally with any sort of health insurance plan. And the health savings account is going to be act in the same way that any dollars you put in are going to be pre-tax. So again, going back to the example, if you make $100,000 a year, you put in $1,000, you're only going to be taxed on $99,000 of income. Now, the difference with the health savings account is that whatever you put in there, it will continue to accrue and can be rolled over from year to year, meaning you don't have to use all of the money in that one year, which is the huge benefit for the health savings account. So if you put in $1,000 and you don't use the $1,000, that $1,000 would still be there in future years as you may need it down the road. Now, what's nice about the health savings account is that you can oftentimes invest the money above. You have to keep a certain amount in cash. Usually, the provider will have some sort of limitation of how much you can keep in cash. But once you have above that, you can then invest that money, and all of the earnings, potential earnings, if you have earnings. 2022 has been so far a down year investment-wise, so probably have losses. But if you had earnings in there, those are going to be tax deferred. And then if you end up using the money for a qualified health expense, then it's tax-free expenses. And so that is a major difference between a flexible spending account and a health savings account, is that you are able to contribute to it. Sometimes your employer contributes to it as well. And if you don't use the money, it continues to grow, tax deferred, potentially tax-free if used for qualified medical expenses. And so that's a wonderful benefit of the health savings account. And then the third option is an HRA, a health reimbursement account, which basically is somewhat of a combination of the flexible spending account and the HRA in some regard, or the HSA. So the HRA, health reimbursement account, that's usually only funded by the employer. You don't actually put any money into the HRA yourself. The employer puts in the money typically. And then that money, though, can be rolled over year after year. So if you don't use the money, then it'll continue to be rolled over year after year, which is nice, because again, then that money can accrue without you having to use it. If thankfully, hopefully, you don't have any sort of health expenses to come up with. And so that usually is tied to specific health plans that your employer may offer. And so you'll definitely want to check with your employer on which one you have access to. Now, then the question becomes, which one should you use? Well, it's a little complicated, but how I think about it, or some of the questions that I might ask whenever I'm thinking about which sort of health savings account should I use, whether that be a flexible spending account or a health savings account or health reimbursement account. Certainly if the HRA is the only thing that your employer options because they just contribute to it on your behalf, great. But if it is, you have the choice between an HSA or an FSA, a lot of it's going to be depending on what type of insurance you're choosing. So that, again, the HSA can only be used if you have a high deductible plan. And you might want to choose a high deductible plan. Typically, folks that are that don't have any sort of ongoing health issues, or people that have a lot of health issues, that kind of fall, if you fall in somewhere in the middle, then maybe leaning towards a flexible spending account with a more comprehensive health insurance plan might end up being a better overall savings for you. You have to kind of run the numbers between what your expected health costs are going to be and how much you need to put away into the flexible spending account. But the folks that are either fairly healthy and don't really go to see the doctor that much, or those that are maybe have a lot of things going on and typically will max out their deductible anyways, those folks might want to look at a health savings account potentially as an option. Now, there's a lot of other things to consider. Your overall financial situation, one is of consideration. Where you are, your age, current financial situation, all of that needs to be taken into consideration. So I hope you found that valuable, and I hope that it clarified some of the differences between a flexible spending account and a health savings account and an HRA. And if you have questions, certainly reach out. I'm happy to help, happy to chat. My name is Kyle Newell. I'm a financial planner. I own Newell Wealth Management, which is a fee-only financial planning firm, wealth management firm here in the Winter Garden, Florida area. I have an office in Winter Garden, Florida, but serve clients in the Central Florida area face-to-face or over Zoom. And of course, I can work with clients nationally as well over Zoom and technology as you're watching here. So if you do have any questions, drop a comment, send me a message, send me an email. My website is newellwm.com, so NEWELLWM.com. It has all my contact info on there. You can set up an appointment directly on there as well. And again, this is an educational video. No specific advice for any specific person. You should always talk with your own financial advisor, tax advisor, attorney, etc., before any sort of financial decisions. And certainly you wouldn't want to take this video alone as advice because it's just educational content. Again, my name is Kyle Newell. I hope you have found value in this video and others, and hope you have a wonderful day. Take care.